Hello and welcome to S&P Global Ratings Fixed Income in 15, a 15-minute chat with a market voice and an S&P executive. My name is Joe Cass. I head up the market outreach practice in the UK. So today we're talking about all things crypto. So I'm joined by Michael Sonnenshein, CEO at Grayscale Investments, and Chuck Mounts, Senior Research Fellow at S&P Global Ratings. Thanks very much for joining me today, Michael and Chuck.
Great to be here.
Thank you. Glad to be here.
Before we kick off, just a quick reminder that the views of the external guest on the show today are their views alone, and they do not represent the views of S&P Global Ratings. Okay, Michael, let's kick off with some questions for you. Michael, would you be able to give us an overview of what you're doing at Grayscale and also how you first became interested in crypto?
Sure. So Grayscale Investments today is the world's largest digital currency asset manager. We manage a little bit north of $50 billion today, spread across a family of 16 different investment products. The firm got its beginning in early 2013. I think we were early to realize that digital currencies were going to become a bona fide asset class, not just Bitcoin, but digital currencies more broadly. And what we realized is that digital currencies, for the most part, were not yet and still largely are not accessible in the same places that investors gain access to stocks and bonds and ETFs and all different kinds of investment instruments. And so to address those challenges head on, we've developed a family of investment vehicles such that investors can participate in Bitcoin, Ethereum, and other digital assets across the Grayscale family, but do so through a form of a security that looks, feels, and acts like many of the other investments that they make. I personally started with the firm about 3 or 4 months into its inception. So when I joined, we had just the one investment product, which is our flagship fund, Grayscale Bitcoin Trust, ticker GBTC, which today is the world's largest Bitcoin investment fund. We had about $60 million of assets at the time. And over the last 8 years, it's just been the opportunity of a lifetime to work collaboratively with everybody on the team, growing our product suite, and then took over as CEO of the firm this past January.
Fantastic. So Chuck, can you provide an overview of our recent digital asset publications, including some of the key takeaways too?
Sure, great. So in the ratings business, we earlier this year launched a Digitalization of Markets research lab. And the goal of this lab is to really provide the insights around digitalization of the marketplace, both in terms of the technology and the capabilities, as well as the creation of new digital assets and digital native assets. So the first report we published from this research lab came out in September, and it was entitled Framing the Emerging Ecosystem. And I think the title really kind of captures what the purpose of the report was. It was really designed to provide a framework for investors to kind of delve into and understand the digital ecosystem, really like a primer of sorts. And to provide kind of the sense or an understanding that a new set of rails is being created in the financial landscape, and that this new set of rails will both complement and disrupt the existing and traditional centralized financial system. So within this report, we covered several key components of this emerging ecosystem, including the technology itself, the scalability of the technology, and then some of the different types of assets. So private cryptocurrencies like Bitcoin, DeFi lending, CBDCs, digital bonds, ESG, and the regulatory backdrop. We also included some case studies, like, for instance, El Salvador adopting a Bitcoin as legal tender. I think some of the key takeaways from the research were that Bitcoin is often an entry point into the digital ecosystem and does grab the lion's share of attention kind of as a result. But the digital ecosystem and the evolution of the ecosystem is much more than just one kind of digital currency. It's really about the expansion of a new set of capabilities, and that the technology that underpins this new set of rails being established is going to provide new ways of working, new asset classes being created, and new power dynamics and relationships within the financial system. And that in totality will impact all market participants. And the speed at which that this is happening is faster than we've ever seen before. So the adoption rates of crypto are outpacing those of the internet in the early 1990s. So, it's happening, and it's happening fast, and it's going to encompass the entire aspects of the financial market system.
Absolutely. Michael, what crypto trends are you seeing from the institutional investors, and how are they engaging with the crypto universe more broadly?
Well, I think there's no doubt that the crypto ecosystem as an asset class is really one that's here to stay in many investors' minds. Whereas there might have been a hesitation on the part, particularly of institutions, to participate historically, any preconceived notions around reputational risk or the staying power or lack thereof of the asset class has largely been shrugged off. And so you do see massive institutional adoption going on today. I think what's so interesting about the investor landscape is that crypto means something different to every type of investor. It doesn't squarely fit into the concept that we historically have held around commodity or currency. It's not valued the same ways that investors typically look at the proposition to or not to invest in a given instrument or company. These typically are not cash flowing instruments like many other instruments out there. And so it's caused investors, particularly institutions, to have to develop an entirely new framework when they think about these allocations. Now, what I'd say is most topical, certainly for this audience, is that if we were talking maybe 18 or 24 months ago, I would tell you that most institutional investors and investors broadly were probably only focused on large cap digital currencies, and within that, probably just Bitcoin and Ethereum. But now we've seen a tremendous acceptance and acceleration of diversification within investors' crypto portfolios. There is this appreciation and expression that there is an entire asset class beyond Bitcoin, and it's really led to the development of all of these subsets of the digital currency ecosystem that are really exciting to investors. So whether that's privacy-focused tokens, it could be DeFi, it could be metaverse and gaming, it could be file storage, video transcription. We're really in the early innings of starting to see how some of these digital assets are really going to impact some systems that we rely on today and really create efficiencies and savings that I think investors are flocking to for good reason.
Great. Chuck, ESG in crypto has been, an ongoing area of concern for some people. So how do we think that ESG factors will actually factor into the digitalization of markets?
Right. So I love this question. And once again, I think we're in the really early stages of thinking about ESG in the context of digital markets. So energy consumption and the cleanliness of that energy consumption has been kind of the lightning rod or front and center in the consideration of digitalization of markets from an ESG lens. But, we would cite that that energy consumption is just one aspect of a much bigger ESG mosaic that digital markets present. And that the promise of distributed ledger technology in financial markets at its core is about greater transparency and efficiency and providing the ability to have financial services available for the 1.7 billion adults globally who are unbanked. So I think that the S and the G components of the digital ecosystem is going to become much more important as the marketplace matures. And I would say it's going to be those S and G components are going to be as important, if not more important, than the energy consumption question that has been raised thus far. But going back to energy now for a second, there's been a lot of analogies about the energy consumption of Bitcoin mining or crypto mining. Is it the GDP? It's amount of electricity as a GDP of the Netherlands, or it's as much as the U.S. refrigerators consume. And I think that. And how much of that is powered by renewable sources. But I think we can really boil down the energy question to a couple of key points. The first is that in the end, the value proposition and questions around energy consumption will be tied to the value proposition of the use case. So I don't think there's many people who question the value of refrigeration. And so it doesn't kind of rise to the level that the digital industry has. But as the digitalization of markets mature and the entirety of the ESG framework comes more into focus, I think the value proposition of the crypto landscape will also mature. And those S and those G components will take on a higher weighting in kind of the framework of evaluating ESG within digital. I guess the second point is that the digital ecosystem is built on a foundation of innovation and entrepreneurship. And we should expect the creators, the cohort of creators that allowed this market to go from zero to a multi-trillion-dollar market in a decade will continue to innovate and provide solutions to the challenges that emerge, including energy consumption.
Fantastic. Michael, what are your thoughts on crypto adoption in 2021 and well beyond? How could regulation fit into this evolution?
Absolutely. Well, first, I just want to hit on some things that Chuck was saying with respect to the ESG and environmental concerns around crypto. So one, I think it's really important to zoom out and recognize that we're only a little bit over a decade into this journey around crypto assets, right? When you think about, comparable industries and look at how long it took us to make meaningful leaps in energy consumption and carbon footprint for things around, for example, automobiles, between the introduction of the Model T and the introduction of electric vehicles, you're talking about a time period of, well over 100 years. It is certainly not going to be the case that it is going to take the crypto ecosystem that long to figure out ways to reduce its carbon footprint and think about more sustainable resources. Today, the statistic is that over 60% of miners globally are already using renewable energy sources as part of their energy mix. And so that could be wind, hydro, solar, you name it. And often, actually, this has become such a competitive part of the mining process that we're actually seeing miners setting themselves up geographically in places where they're actually consuming energy that's being put on the grid that would otherwise get wasted. And so this industry is wasting no time in attacking this issue head on, and certainly is as focused and has as much momentum as anyone that's ever come before it, if not more. So I certainly think that the crypto ecosystem will figure this out. And I think as we, turn the corner on 2021 and move into the new year, the conversation around crypto amongst regulatory authorities has probably never been as robust as it is today. I do think, though, there's quite a bit of differentiation between what you'll see here in the US and other parts of the world, right? Many investors are looking at the fact that certain jurisdictions have already approved Bitcoin ETFs. And, here in the US, we, still do not have a spot Bitcoin ETF available to US investors. Here in the US, what we're seeing is mostly enforcement actions, meaning that bad actors or people that are skirting very well established rules and regulations on financial assets are being called out and kind of being held accountable for the footfalls that they're creating. But I do think what we need here in the US is regulation beyond enforcement. And so there's a couple of different ways that folks are thinking about how the US will approach it. It could be that there will be, entirely new acts of Congress that do focus on crypto and crypto regulation, particularly crypto exchanges, KYC, AML, and all of the concerns that are in and around using crypto assets. Some others are actually calling for the entire creation of a totally new federal agency here in the US that could just focus on emerging technologies like crypto and others. Interestingly, though, outside the US, you do see, depending on where you are in the world, different temperatures around this. Places like Singapore have given companies and businesses the ability to operate in really a regulatory sandbox where they can experiment without fear that they're going to, face any kind of enforcement or other actions. Whereas other parts of the world, like China, for example, has continued to only crack down on crypto activities and crypto mining. So it does certainly unearth quite a bit of government intervention, because we have long been, and still to this day, look at the idea that governments are the ones responsible for controlling, monitoring, and creating their currencies. And a lot of that is starting to be shaken up by the advent of this technology.
Absolutely. So now we're going to move on to some non-market related questions. So Chuck, I'll start with you. Chuck, everyone seems to have their own personal crypto journey of discovery. So what was your aha moment within the digital asset space, and has your perspective changed at all over time?
Right. So I joined S&P Global about 5 years ago. And before that, I spent 25 years on Wall Street as a credit analyst covering global banks and sovereigns. And so when the global financial crisis erupted, a little over a decade ago, it was pretty much all hands on deck to deal with the disruption and volatility that were happening from that market tsunami. And I remember at that point hearing about Bitcoin. And my immediate first two thoughts were, one, that's crazy. And then two, it's irrelevant. And I didn't really give it a lot of thought for the kind of following 9-10 years until about a year ago, when I was brought into the ratings business to help with a project on changing debt capital market structure and an evaluation of what that means for clients and for the business. And kind of coming into this project, I thought the technology piece of the project would be centered around e-trading and kind of efficiency in trading of bonds. But while I was kind of doing this work, I was faced really front and center with the distributed ledger technology and the emergence of digitalization. And so at that point, I, for the first time, read the Bitcoin white paper. And, I would say that, I'm not a technologist, but I do understand how markets function. And I understand the interplay between banks and macro policy formation. And just from reading the Bitcoin white paper, it hit me that the changes that are going to be put in place by the combination of DLT, cryptography, smart contracts is going to be transformational in nature of how markets function. And so, I've continued this journey today, and I would say the one thing I would say is that I'm just really upset I didn't read the Bitcoin white paper 10 years ago.
Great stuff. So, Michael, you joined Grayscale from the world of traditional finance as an account executive almost 8 years ago. You're now the CEO and a board member. So that's good work. That's quick work. So can you talk a bit about your career and your rise within the company? Have you got any career tips for any of our viewers or listeners?
Yeah, well, I think what was so appealing about joining Grayscale was that it was really the opportunity to be a part of building something, which is a rare opportunity that you get in your career. You typically are faced with opportunities to help reshape something or clean something up, or in most instances, join a very well-established company or business practice, and you just kind of become a cog in a wheel. And so when you have an opportunity like this to be a part of building something, it creates an entirely different motivation for you as an individual and really shapes your work ethic, because it gives you that real sense of accountability that if you perform well, it impacts the business. And at the same time, if you don't perform well, it also impacts the business. And so I think if I've learned anything from being a part of building Grayscale and now taking over as CEO, it is super, super important to think about culture and the way that you work with and interact with your coworkers. I'd say at Grayscale, we've created a culture that is super accountable, transparent, and deliberate. And when I say accountable, we all have this, certainly swim lanes and things that we're responsible for, but also this shared sense of accountability that there's an intricate inner working between each other. Folks are certainly transparent with each other. There's no egos, and ego really has no place at the office, I've come to learn. Everyone is moving in the same direction. And that also goes to the transparency factor is if folks are transparent with one another about what they're working on, then that's how everyone can help each other out and continue to move very, very quickly. And so it's unique what we've built. And again, early days for this ecosystem and early days at Grayscale. Despite our growth and our place within the marketplace, I have to say that I think we're feeling like we're just getting started.
Great stuff. So Chuck, throughout your career, as you mentioned before, you've worked at a number of flagship Wall Street names, so Goldman Sachs, UBS, Merrill Lynch, as well as spending time at the Federal Reserve Bank of New York. So given your vast experience in markets, what size of opportunity and level of disruption does the digital asset space represent?
Right. So kind of going back to reading the Bitcoin white paper, kind of picking up from that, it is these changes that are already underway. There's not hypothetical. They are already happening, will be transformational in nature. And I think establish new ways of working within the market. So I'm on my digital journey on a daily basis, and every day I would say I learn something new, and I'm amazed actually by the complexity of the ecosystem, the innovation in the ecosystem, and the speed at which things are changing. So as I said before, this is a market that's gone from zero to close to $3 trillion in the span of a decade. But I do think, actually, with 2020 hindsight, 10 years from now, we're going to recognize that this, where we are right now, is just the very beginning of this evolution and a drop in the bucket, kind of going back to what Michael said, like we've got a long ways to run here. And I just put that in the context of, a near $3 trillion market against a market of $96 trillion in broad money supply, $106 trillion in global equities, $124 trillion in global bonds, $250 plus trillion in global debt, including household debt, 280 trillion value of property markets, and $610 trillion in notional value of derivatives. So I think you can see the theme here. There's a long ways to go as these markets evolve, and that Bitcoin is the entry point often into the digital ecosystem. The ecosystem is much more than any one currency, as I said before. And I personally think that the financialization of NFTs and the tokenization of these global markets I just mentioned a second ago portend more change to come. And I would say massive change to come with exponential growth potential. And so, although it seems hard to believe, actually, as a market veteran, I've seen some very interesting markets, and I would have thought I've seen kind of some of the most interesting markets possible. But I do actually think that the next 10 years are going to be the most exciting 10 years of the last decades, and they will be the most momentous in terms of market evolution and change, opportunity, and risk.
Great, fantastic. Thanks, Chuck. So, Michael, the last question goes to you. On Fixed Income in 15, this podcast, I usually interview leaders, influential individuals from the world of finance and economics. So who would you recommend I ask from the world of digital assets to be a guest on a future episode of the show?
I'm going to recommend a good friend of mine. Her name is Sheila Warren, and she works to oversee the digital asset and cryptocurrency focused areas of the World Economic Forum. In her role at the World Economic Forum, they're actually bringing together not only government and state actors focusing on things like central bank digital currencies and developing frameworks for it, but they're now even expanding beyond that, really tackling things like regulation as well as the environmental impact and some of the issues we discussed today. So I think you'd certainly enjoy a conversation with Sheila, and she's as well versed as anybody on the ecosystem and where it's headed.
Great. Well, my thanks to Michael, my thanks to Chuck for your time today. It's been great to hear your views. For everyone watching and listening, see you next time on Fixed Income in 15.
Thank you.
Thank you.